Hello everyone, this is Konstantin, Corporate Development Manager at GDEV. Welcome to the first episode of our Gaming in Public Markets video report, where I'll be reviewing the capital markets with a focus on the global gaming industry. Let's go! Today on the show, global stock market performance in April affected by surprising macroeconomic data, gaming stocks, the best and worst performance in a heated April. A new reporting season opens with encouraging results, and more on recent gaming news and how it affects the capital markets today. I'll start with the stock market performance in April. The 2024 stock market rally ran out of steam, as investors anticipate the Federal Reserve may still not be close to a pivot to interest rate cuts, due to higher than expected 3.5% inflation rate, well above the 2% long-term target. After the last meeting, the Fed predicted 3 rate cuts by the end of this year. However, as time goes on, that becomes less of a certainty. Some economists have even suggested that rates won't budge until March 2025. You might find yourself asking, why does the key interest rate have such an impact on stock growth? It is quite simple. When having a guaranteed income through government bonds, some investors prefer allocating their money to bonds from equity. As a result, April saw stock market decline. The S&P 500 dropped 4% last month, while the tech-heavy NASDAQ Composite Index dropped 4.5%, the largest decrease since September 2023. If we take a broader outlook on 2024 as a whole, although US economic growth slowed in the first quarter, the S&P 500 and NASDAQ Composite both remain up 6% year-to-date. It is true to say that the whole market is nervously anticipating the reporting season results. Through the end of April and beginning of May, earnings have finished ahead of expectations for major companies that have reported. Moreover, some positive macroeconomic data could help the market regain its mojo next month, despite the fact that historically May has been one of the weaker months for the stock market. Now, let's take a closer look at the gaming industry in general and the performance of individual companies. The VanEck Video Gaming and Esports ETF showed a 3% decline in April, although year-to-date growth stands at 8.5%, outperforming the major indices. Gaming stock market top performer in April was the French AA publisher Focus Entertainment, which exhibited solid fourth-quarter earnings with 12% revenue growth. The company also announced a new organizational structure, changing its name to Pullup Entertainment and announcing the rollout of a new strategy. The shares of Swedish gaming giant Embracer also improved in April, experiencing a 17% share price increase due to the announced split into 3 separate entities, with each to be listed on the Stockholm exchange. This division will allow the companies to better focus on their individual business segments and increase their chances of success. As a result, we have: first, Asmodee, publisher and distributor of tabletop games. The second one is Coffee Stain and Friends, indie game and AA game division for PC, consoles and mobile devices. And the third one is Middle-earth Enterprises and Friends, AAA game division for PC and consoles, also managing IPs such as The Lord of the Rings and Tomb Raider. As an aside, having a chance to connect with the public, I just can't miss the opportunity to mention the recently announced collaboration between HeroWars, main IP of GDEV, and the Tomb Raider franchise owned by Embracer. As part of it, Lara Croft will be a new character in HeroWars, permanently present in the game. Among the losers in April, we observe US-based social casino publisher Playstudios with a share price decline of 22%, undoing the 20% growth in March when, ahead of consensus 2023, earnings were revealed. However, analysts left their 2024 estimates unchanged, resulting in a share price dip in April. If we look at year-to-date performance, the clear leader would be Applovin, which, among the AI boom and through serious product enhancements, managed to grow impressively by 600% since the beginning of 2023. However, Applovin's current market cap is still quite far from the 2021 peak. Additionally, Krafton deserves attention, as it performed strongly last year and continues this trend through successful PUBG operation, boasting a 15% increase since the beginning of the last year. Let's move on to valuation changes within the gaming industry. On the graphs, you may see how the next 12 months EV to revenue and EV to EBITDA consensus estimates changed for gaming companies over the last year. You may observe the market division into 3 categories. First, mobile-only gaming companies. Second, diversified companies which offer products across PC, console, and mobile platforms. Those companies are valued higher due to more diversified revenue channels and, in most cases, stronger IPs. Take GDEV as an example, which has mobile, browser, and PC titles operating on the majority of gaming platforms. It has recently launched its iconic mobile title PixelGun on PC. The game was launched on Steam in April, immediately entering the top 20 best-selling and top 50 most played games. Lastly, advertising and game tech companies such as Unity and Applovin that have historically commanded significantly higher valuations due to their platform nature, having high revenue and profit potential. So as you see, valuations have been relatively flat in recent months following fluctuations in 2023. We will track those indicators in our video on a regular basis. Let's observe together how the earnings season will affect the valuations. As I mentioned earlier, the reporting season for the first quarter of 2024 has begun. Some companies, such as Google, Tesla, and Snap, have reported results beyond analyst expectations, allowing the market to partially rebound in the final days of April. But among gaming companies, Stillfront's first quarter revenues were 1% below consensus, and adjusted EBITDA was 10% below, mainly due to the high user acquisition costs. Company's marketing costs significantly increased, accounting for 34% of revenue compared to 37% in the previous year. As a result, there was a negative reaction from investors, with a 14% share price decline on the trading day following the release of the report. An important note: it is great when a company invests in marketing, since mobile gaming operates on a cohort business model, where marketing spend turns into positive cash flow in the coming months. Still, it is crucial to communicate with the market, explaining the rationale behind increased spending. To learn more, check our video explaining how the mobile gaming business looks at EBITDA. Also, among the early reporters was another Swedish mobile holding, MTG. Despite missing analyst revenue consensus by 3%, MTG exceeded expectations for EBITDA by 9%. Due to a reduction in user acquisition initiatives, the margin reached 27%, a significant increase compared to the 20% figure in last year. So, as our first episode comes to a close, I want to thank you for watching. Please like and subscribe to GDEV News. I look forward to reading and answering your questions in the comment section. See you next time!